The government has exempted life and health insurance from goods and services tax or GST. What kind of policies does it include? Well, under the life insurance segment, the GST exemption would be applicable on term life insurance policies, the ULIP policies, endowment policies and annuity policies. Under health insurance, GST exemption would be applicable on individual health insurance policies as well as family floater policies. Now, what does GST exemption mean for policy holders? Well, if insurers pass on the entire benefit, the health insurance premiums will reduce by 18%. ULIP and the term life insurance policy premium will also reduce by about 18%. But since the current GST on endowment as well as those on annuity policy is 4.5% and 1.8%, the premiums there would come down in the same proportion. This will certainly be a big positive for policyholders. For insurance companies, however, the move translates to additional costs. How? Well, there is no provision of input tax credit or ITC for GST paid by insurers on their expenses. Inability to set off the GST expenses in the absence of input tax credit will drive up the cost incurred on selling a policy. This matters because the costs are steep. Analysts suggest that to secure a premium of about 100 rupees, insurer spends about 70 rupees, and in the absence of ITC or input tax credit, insurers can't offset GST paid on this cost. Only reinsurance expenses will get exempted from GST, which is about 1/3 of the total cost. GST on the balance 2/3, which is commission as well as claims expenses, will not get an offset. This could lead to an additional cost of 5 to 7% on every policy of health insurance and about 9 to 11% for life insurers. Now, for insurers, there are three scenarios which emerge. The first one, insurers taking a hit on their own books. Entire 5 to 7% hit for health insurers and 9 to 11% hit for life insurance companies will be taken under this scenario by the respective life insurer or the health insurance company. The second scenario is sharing cost with the distributor. Since commission and claim cost still has GST applicable, the burden of that 5 to 7% and 9 to 11% could be shared between the insurer and the distributor. Well, under the third scenario, insurers may not pass the entire benefit of the GST cut to policyholders. Insurers may only look to pass a partial benefit to the policyholder and keep the rest on their own books to sort of contain the damage which they would be taking in terms of increased cost. This may be difficult, but given government's intention is to pass the entire benefit of GST cut to the policyholders.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.